It looks like Elon has lost the cage match against Mark Zuckerberg. The real cage match that actually matters. This is a chart showing the market cap of Meta and the market cap of Tesla. I think it's time. A change is made for Tesla. Tesla needs to focus on profitability. After all, a Tesla product sells itself. Cutting prices does nothing for demand, even potentially announcing a share buyback. At this point would be good news and would send Tesla stock higher, I would imagine, over 20% in the course of just a couple of days. You already know Elon is pissed off looking at what's happening with Meta today. But that is neither here or there. That is just my personal opinion. If you want to share this information with Elon, feel free to. I did exactly that and tagged him over on X. If you guys want to share this post, feel free to. Michael Tyler on X. Here in this video, we are going to be going over what I expect from Tesla throughout the rest of this year. It's pretty clear something changed today in a very dramatic way, and I think you need to know this, and the sooner you know this, potentially the more money that you will make, or at least you'll be in the best position possible to make the best decision based on that information. There's a couple things that we learned today. We learned it's very unlikely that we are actually heading into a recession via the jobs report that came in at 353,000 jobs, way higher than these experts were expecting, around 185,000. Even last month's jobs report was revised from 212,000, revised 117,000 jobs higher. The month of November was even revised about 9,000 jobs higher. It's clear, if there's one conclusion we can make, the economy most likely is actually accelerating right now. Not getting worse and heading into a recession, but completely avoiding a recession. The Atlanta Fed GDP Now tracker is estimating the economy in Q1 is running at a 4.2% growth rate. I mean, mix these things together and what do you have? Well, you have a soft landing for our economy and probably, well, maybe 1 or 2 rate cuts in 2024, but not the 5 or 6 that the markets are currently pricing in. That is a little bit of a problem for Tesla stock, and let's talk about exactly why that is, and if Tesla stock could indeed pull off a Meta-like event over the next 12 months or so. A Meta-like event, well, looks like this. Meta going from $300, almost $400 per share, down to $100, and back up to almost $500 per share. Could Tesla do something similar in 2024, if not the first half of 2025? Now, first up, I think it's important to understand that we're probably not heading into a recession. The number one question then, of course, is what is the path of inflation? If inflation continues to fall at the same pace that it has been, then we could get 5 rate cuts by the end of this year. That's what the markets are currently pricing in for 2024. The best possible outcome is 5 rate cuts, even 4 rate cuts at this point, and a very strong economy, an economy that's actually accelerating. Back in January through June of 2022, you were in a technical recession. Now, this was not declared a recession because people were not losing jobs the way that you would think they would during a typical recession. Now, the best way to understand what's going on in the economy, in my personal opinion, over the past 2 years is this. The rolling recession we've heard of, you haven't seen a central catalyst to cause a lot of layoffs, a lot of unemployed people at the same time. That's why you have not entered into an official recession, and that's why GDP has not looked like you're in a recession. But in all reality, let's be honest, Apple, they've already seen their recession. They might be coming out of their recession. Now, why do I point out Apple? Because Apple, I think, is a pretty good bellwether for phones, for tablets, for watches, for TVs, for electronics, for non-necessity items, right? Apple's a pretty good bellwether of that. You've went through your recession. You're probably coming out of that. Manufacturing is in that right now. Leisure, travel, hospitality. Does that go through some kind of rolling recession? We'll have to wait and see. Long story short, it appears like you're getting certain sectors that are going into these recessions, and then when those sectors are coming out of recession, something else is going into a recession. That is this rolling recession logic. But at this point, I think it's pretty safe to say without any black swan event, you're probably past the worst of it. Now, obviously, could I be wrong? Of course. There could be a black swan event. We could go into a recession. Now, why I specifically speak about a black swan event is because in recent times, there has been far fewer recessions than there has been over the last 200 years. And the recessions that we have seen over the past 20, 30 years have happened because of something. Banking crisis, Rona, .com bubble, right? These have all been kind of black swan events in and of themselves to give us a recession, to give us mass layoffs. I cannot foresee that right now. There's a lot of tensions in the Middle East, and if I were to try to think of something that could be a black swan event, it would be potentially Iran cutting off the flow of oil, which could theoretically turn out to be a pretty bad scenario for markets. And that's probably the most likely thing, even though I think that's still very, very low odds, that you could see Iran cut off the Strait of Hormuz, which is about 30% of the daily global oil supply, which would have very high inflationary consequences for the Western world, for the developed world specifically, and that would cause Jerome Powell to likely raise rates further. And even if we did avoid some kind of recession in that scenario, if you've seen gas back to $5, $6, $7 a gallon again or higher, I don't think we would be able to avoid a recession. So you could potentially get high inflation and a recession in that scenario. Do I think that's likely? Do I think that's going to happen? No. But you do want to be watching this Middle East situation pretty closely. Iran has promised to retaliate to any U.S. aggression. What does that mean? How much damage do they want to inflict? Do they really want to cause a global disaster for the U.S.? If they do, they could cut off the Strait of Hormuz, which is technically like their water space anyway. So that's like the worst possible outcome here. But besides that, I don't see anything that's going to drag the economy into a recession. Again, I do think there's greater odds right now that we're actually entering into an expansionary period for the economy. Now, before we actually get into if Tesla stock could pull off a Meta-like event, and that would be Tesla stock hitting all-time highs by the end of this year. That is what I would call a Meta-like event. I first want to acknowledge the very attractive risk-to-reward profile for Tesla. Expectations are very low. They've been reset. Nobody expects Tesla to do well. So that means if Tesla does do well, you're likely to be rewarded a lot more for that. Now, theoretically, minus any kind of catastrophe or black swan event, if Tesla were to cut prices or just do more bad business, things, let's just call it that, because let's be honest, Tesla is where Tesla is. Tesla stock is at $187 because Elon and the Tesla team wants it to be there. They don't care about what's going on with Tesla stock. If they did, they could flip the switch and Tesla stock would go higher. All they would have to do is announce a buyback. They would have to say, this year we're going to focus on profitability. They already didn't give us guidance, so who cares on that front, right? Tesla could change this if they wanted to. Question is, do they want to? Do they not want to? I don't know. Let me know down below in the comment section. But I do think if you do get some more incremental price cuts and estimates do fall a little bit more, you could probably fall to about 170. Now, in my opinion, minus any kind of black swan catastrophe, the low that you would see, even when you get a pullback, not if, but when you get a pullback in 2024, a correction-like event is likely around 150. I would be very surprised if Tesla stock fell under 150. Like, that would be actually insane. So what do you stand to lose here in a theoretical explanation or example? $37 per share? Is that a realistic loss that you could see in 2024? Of course. What could your potential upside look like? Well, if the Tesla team and Elon wants Tesla stock to go higher, I'll tell you right now, Elon has got to be pissed what's going on with Tesla stock compared to Meta. He's probably not too happy about that. So if they wanted to, they could likely get the stock back to all-time highs, right? But the markets are probably not going to be helping too much with that. So what I mean by the markets are not going to help out with that is in this scenario, in which I think is the most likely at this point, where the economy does well, inflation remains kind of sticky in the mid twos, maybe the high twos over the next, period of time, the next couple of months, the next 6 months or so, you're not going to get a lot of money heading back into our markets. You're not going to get a lot of the 6.2 trillion in money market funds heading back into stocks because the Fed is not going to cut rates in that scenario. If there is no pressure on the Fed to cut rates, Jerome Powell's made it very clear. They would rather keep rates a little too high for a little too long rather than cut rates early. So the most likely outcome right now, which is kind of a stagnating inflation, which last month inflation actually increased month over month. So who knows? And maybe inflation rises from here. My base case assumption is inflation kind of just trends at about 0.2% month over month, which is 2.4% annualized. That puts you at the essentially mid twos. Jerome Powell is not going to feel comfortable, lowering rates at that point. Maybe by the end of the year that, inflation starts to come down and who knows? You could only speculate on that. But markets are pricing in 5 rate cuts. You're not going to get that. Let me be honest. Let me just put it out there right now. I'm not a financial advisor. I'm not a financial planner, but that is not going to happen. Not with what's going on in the recent data that we just got. So if we don't get rate cuts in 2024, which is a possibility, the Fed paused for 16 months from 06 to 08. 16 months they were paused, did nothing with policy, held rates at 5.25%. They will do that again. Don't think for a second Powell will just not keep kicking the can down the road. He will. And in fact, that looks likely at this point. So if you're not getting new capital coming into our markets, if rates stay high, you're not going to get new capital coming into our markets. You're not going to get further multiple expansion. Now, I expected previously that Tesla's multiple could hit about 100 by the end of 2024. Now, that's still possible if inflation continues to fall and money comes into our markets. But without Tesla really taking a focus on profitability, without Tesla really taking a focus on getting Tesla stock higher, doing deliberate measures to get Tesla stock higher, you're probably not going to see 100 times multiple by the end of 2024. Now, possibly you could. Morgan Stanley's Adam Jonas thinks Tesla's multiple could be 170 plus by the end of 2024. Today, Tesla's multiple is around 50, 55. So that would be about double from here. And that's important when it comes down to earnings, because if you don't get any multiple expansion, but Tesla's earnings grow, then Tesla's share price grows. If Tesla's earnings stay the same, come in line with expectations, but you get multiple growth, then you could be at all-time highs. And just for anyone that is kind of newer to the channel, has not seen some of the videos that we have put out recently, my price prediction for Tesla stock is with an EPS close to about $4 per share for 2024, with 100 times multiple, times 100 by 4, you get $400 per share. If Tesla's multiple stays where it is, at about, let's call it 50, and earnings come in at $4, then you're at $200 per share. That's minimal upside from here. But if Tesla takes a focus on profitability, if they even just said that, all they would have to do is literally just say they're going to focus on profitability. And Tesla's multiple would probably go up by about 10 to 15. And theoretically, just by saying that, not even proving anything, just by saying that, which you obviously want to, prove it at the same time, that could take Tesla's multiple back to about 65 or 70. That would put Tesla stock at about 260, I think, pretty quickly. That is a choice that Tesla and Elon will have to make in 2024. Because if they don't, I think your upside is pretty limited at this point, because I don't think you're going to get a lot of multiple expansion, because I don't think we're going to get rate cuts. If we do, it's going to be way in the back half of the year. Or if the Fed sees something unforecasted that we don't know about. Or again, if there's, oil shocks out there because Iran cuts off the supply of oil, 20, 30% of the global supply via the Strait of Hormuz, well, maybe that causes rate cuts as well. But besides anything unpredictable, what we can predict today shows me we're probably not going to get rate cuts. Now, do I think Tesla and Elon will ultimately do that? Yes. I think Tesla and Elon will focus on profitability. I think they will start to paint a prettier picture for investors. In fact, I think they have actually already opened the door for this, because not giving guidance, there's really no definitive expectations about what margins are going to be, about what deliveries specifically are going to be. So if you want to just focus on profitability, focus on bettering the business, getting the share price higher in terms of profitability and EPS growth, well, you don't want to have a delivery target on your back, because what? You become more profitable, but you miss your guidance. That's not good either. If you don't have guidance, throw that out there, but you just become more profitable, that's a win-win all around. Companies that are not even growing that much, but remaining profitable, like an Apple, just now seen a 1% revenue growth year over year. The last 4 quarters, they have been negative. It was 5% negative at one point in 2023. What has Apple stock done? Very, very well. If you focus on profitability, you don't necessarily need to grow all that much. In this market environment, at least. Now that, my friends, is how Tesla could pull off a meta-like event. Now let's discuss the best possible outcome. Like, this is the best possible outcome. It's not something you should invest based off of, but I don't think it's too unreasonable that we could see this happen as well. Let's say everything goes smooth. There's no Iran situation. There's no oil shock. Inflation continues to fall. It does not stay sticky in the 3s or the 2s. It continues to fall. That allows the Fed to start aggressively cutting rates in the second half of the year. Then let's imagine the economy continues to accelerate. So you have accelerating growth in the economy, rates falling, let's say 5 or 6 times by the end of the year, most of that happening in the second half of the year. Let's be honest, it's an election year, so as long as inflation does come down, I think Powell will be able to cut aggressively. And I think it's politically incentivized by the current administration if he does indeed start to aggressively cut by the end of this year, by really the third quarter of this year. So in that scenario, that's your Goldilocks soft landing scenario. Well, my expectation would be, if it became cheaper to get a loan on a Tesla, Tesla's not going to give you all of the benefit. Tesla's going to split that benefit with you. Meaning, just for an example, if you can get a Model 3 today for, let's call it $600 a month. Let's say rates do fall, and by the end of this year, maybe by the third quarter, you can get a Model 3 for $450. Okay. I don't think Tesla's going to pass on that $150 difference to you. In that scenario, Tesla could raise prices at least a little bit, marginally, maybe $3,000 to $4,000, maybe $5,000. So instead of giving you a $450 monthly payment, Tesla could give you a $500 payment, and they could keep, let's say, $50 of that, right? In this theoretical situation, you could see consumers get lower payments for Tesla, Tesla getting, a higher selling price. It would be a win-win for everyone involved. That is how Tesla's EPS in the third and fourth quarter could potentially balloon and thus send Tesla stock much higher. At the same time, you get a lot of rate cuts and multiple expansion. That would be fantastic for Tesla stock. So theoretically, just simple math here, let's say Tesla comes in with, let's say, $1.10 of EPS for the first 2 quarters. And then let's say Tesla's EPS jumps to $2.50 in Q3 because they're able to start raising prices pretty soon into Q3, likely around September or so, right? So then that jumps to $4.70 for EPS for 2024. And let's say Q4 is around $2.75. In this scenario, you could see Tesla with a full year EPS of $7.45 per share, theoretically, of course. Assign that with 100 times multiple, you could be at $745 per share. Now, would that EPS actually be like that? Probably not. You take out R&D, all of your CapEx expenses, maybe you're at $6 per share of EPS. Times 100 times multiple, because rates are falling, then you're at $600 per share. So yes, I think it is possible that Tesla could pull a Meta-like event. Is that my base case? No. It's not. My base case is for around $4 of EPS for 2024 times $100 per share, $400. Pretty simple as that. 100 times multiple, around $400 per share. It's that simple. But could it be more than that? Of course. It just depends on if Tesla focuses on profitability and what the path of inflation looks like ahead. But I do think we can make a definitive conclusion right now. The economy is most likely actually accelerating. Let me know what you think about this information down below in the comment section. What is your expectation for Tesla stock over the next coming months? Thank you for watching. My name is Michael Tyler. If you guys would like to come trade with us live in real time, check out that link down below in the description of this video. You guys have a great weekend, and I will see you in the next one.